the insurer of last resort?
What he's saying makes total sense. Like if you were CEO and you knew how strategically important your industry was, wouldn't you do everything in your power to get as big as possible so that the government takes a strategic interest in you? Because if AI CapEx, as they call it, by the way, CapEx stands for capital expenditures. Anytime you hear CapEx, just remember spending. If AI CapEx slows down, the US economy slows down. If the US economy slows down, markets fall. If markets fall, there's going to be political pressure to save these companies at all costs, because if not, it's going to hurt everyone, not just investors, but the jobs, the employees, and the country's interest as well. That's why Sam can say something like that out loud, because it's true. The US government cannot and will not allow this race of AI to just be lost. Now, what all of this means is that the bigger AI gets, the more all of us are involved in it. And the more likely taxpayers will have to eventually backstop it if something were to go wrong. Even if you're someone who doesn't really care about AI, you probably still have a huge financial interest in it. Why? Because of how an index works. It works because the S&P 500 index is what's called a market cap weighted index. Remember, the market cap is just the amount of shares multiplied by a company's price. That means the more expensive a stock becomes, the bigger the company gets. And the more it moves up that index because the market cap grows bigger. That's why it's a market cap weighted index. And as it gets bigger, it attracts more and more money. And that is how just the top 5 companies out of 495 represent 30% of the whole index right now. So when you combine the circular funding mechanism with how the index works, you start to see how it all comes together, right? Money gets passed around via the circular financing, so no real value is created. The price of a stock goes up really fast, and those participating in this feedback loop get bigger and bigger, so more money is allocated to them through passive investing, and now they've got more money to continue making these commitments, which adds to their valuation, and so on and so forth. That's exactly why some people think that Warren Buffett and Michael Burry might be doing what they're doing. Remember, these are two people who don't agree on almost anything. They don't invest in the same